Any basketball fan knows the phrase, everybody acts tough when they're up. Never has this phrase been more true than in real estate investing strategies, and I'll explain why. I see so much financial content online aimed at telling people to buy short-term rental properties, to take loans against their property and buy more rental properties or flip properties. And here's why I'm very hesitant to recommend aggressive strategies like this to investors. Since the 2007-2008 housing crash, we've been in a bull market from them. Housing prices tanked, and they've been consistently rising since then. Now, could they keep going up for the foreseeable future? Absolutely. But history tells us that eventually there will be a correction. There's never been a 20, 30, 40-year period where prices have exclusively gone up and never corrected. So what does that mean for rental real estate as a primary investment strategy? What's different about real estate as opposed to most investment strategies is that there's a debt component. If stocks go down, I don't panic. I don't need that money right now. And I'm pretty confident that Amazon's value will regain itself in the future. So if my stock portfolio goes down, I weather the storm and I wait for the value to rebound. You can't necessarily apply that logic to real estate because you have a mortgage to pay, which means if cash flow decreases or goes away altogether because there's a recession that leads to a bunch of unoccupied tenancies, that's going to immediately impact your ability to stay solvent. So the stakes are way higher when it comes to real estate than almost any other investment vehicle. And the reason I started this video with the phrase, everybody acts tough when they're up, is that real estate personalities are telling you to make these investments, and they talk about their history as successful real estate flippers and real estate investors. But the problem is, most of these people are young. So you have people explaining this as a strategy to you, but they've never gone through a correcting period or a recession where the value of their real estate tanked by 10, 15, 30, 40% like it did in 07 and 08. So if there is a recession looming where real estate values are going to plummet, all of these people that are highly leveraged in debt on these investment positions are going to be in a way worse position than people who have lots of bonds and stocks and treasuries and aren't required to make cash payments in order to maintain their investments. It doesn't mean real estate is a bad investment choice for you, but it does mean that you should be very weary of taking investment advice to purchase heavily debt leveraged investment vehicles from people that are too young to ever know what it's like to go through a financial recession. Work with professionals who understand your full situation and the best investment strategies for you in particular, and follow for more financial advice.